Hey, we know that inflation and increased interest rates can have significant effects on personal finance, impacting various aspects of an individual's financial situation. But how much aware are we with their effects? Let's explore them in detail. But wait, before that, let's look at the inflation concept first. Inflation refers to the general increase in the price level of goods and services over time. And it erodes the purchasing power of money, meaning that a fixed amount of money will buy fewer goods and services in the future. Now that we have learned what is inflation, let's see there some key effects of inflation on personal finance. 1. Decreased purchasing power. As the cost of living rises, the purchasing power of money decreases. So, this means that the same amount of money will buy fewer goods and services, leading to a decline in the standard of living and less incomes keep up with inflation. 2. Impact on savings and investments. Inflation erodes the real value of savings over time. Therefore, if the interest earned on savings or investments does not outpace inflation, the purchasing power of those savings will diminish. To combat this, individuals should consider investments that offer returns exceeding the inflation rate, such as stocks or real estate. 3. Effect on debt. While inflation can erode the real value of money, it can also reduce the real burden of debt over time. Borrowers may find it easier to repay fixed-rate debts since the value of the debt decreases relative to their income and expenses. 4. Cost of borrowing. Inflation often leads to higher interest rates, which can result in increased borrowing costs. If individuals have variable-rate loans, such as adjustable-rate mortgages, their monthly payments may rise as interest rates increase. 5. Effect of inflation on personal finance. Inflation also means the general increase in prices of goods and services over time, leading to a decrease in the purchasing power of money. Inflation can significantly impact personal finance in several ways like: Number 1. Reduced purchasing power. As inflation rises, the value of money declines, which means that the same amount of money will buy fewer goods and services. This reduction in purchasing power can affect individuals' ability to maintain their standard of living and afford everyday expenses. Number 2. The impact on savings. Inflation erodes the real value of savings. Money saved in low-interest savings accounts or assets with returns that do not outpace inflation can lose value over time. It's essential to invest in assets that can potentially outpace inflation, such as stocks, real estate, or inflation-protected securities. Number 3. Increased cost of borrowing. Inflation often leads to higher interest rates set by central banks to control its impact. Borrowing becomes more expensive as interest rates rise, affecting mortgage rates, car loans, and personal loans. So, individuals may need to allocate more of their income to debt repayment. Number 4. Retirement planning. Inflation can significantly impact retirement planning. For long-term goals like retirement, individuals need to consider inflation in their financial calculations to ensure that their savings will be sufficient to maintain their lifestyle during retirement. Number 5. Salary and income adjustments. Inflation can affect wage growth and salary adjustments. If salary increases do not keep pace with inflation, the purchasing power of income may decrease, impacting an individual's ability to cover expenses. Number 6. Asset price appreciation. Inflation can lead to the appreciation of certain assets like real estate and stocks, providing potential opportunities for capital gains and increasing net worth. Number 7. Impact on mortgage payments. Homeowners with adjustable-rate mortgages will experience higher monthly mortgage payments as interest rates rise, affecting their monthly budget. Number 8. Credit card debt. Credit card interest rates are often tied to the prime rate. So, an increase in interest rates can lead to higher credit card interest rates, making it more challenging to pay off credit card debt. Number 9. Economic impact. Higher interest rates can slow down economic growth by reducing consumer spending and business investments. This can lead to reduced job opportunities and economic uncertainties. Last but not the least. Number 10. Impact on investments. Higher interest rates can lead to lower stock prices, as investors might shift their investments to fixed income assets offering higher yields. Now, a question will pop in your mind. The question is, can we navigate inflation to mitigate the impact? And the answer is, yes, of course. To navigate the effects of inflation and increased interest rates on personal finance, we can consider the following strategies. 1. Diversify investments. Diversifying investments across various asset classes can help mitigate the impact of inflation and interest rate fluctuations. 2. Manage debt. If possible, consider refinancing fixed-rate debts during low-interest rate periods to lock in favorable rates. For variable-rate debts, be prepared for potential increases in borrowing costs. 3. Budgeting and saving. Implementing a budget and saving regularly can help offset the impact of inflation on the cost of living. 4. Consider investments. Inflation-protected securities, real estate, and equities are among the investments that may offer protection against inflation. 5. Stay informed. Stay informed about economic conditions, interest rate changes, and inflation trends to make informed financial decisions. In conclusion, inflation and increased interest rates can significantly impact personal finance. So, we need to be aware of these effects and take proactive steps to protect their financial well-being, such as investing in inflation-protected assets, managing debt carefully, and adjusting financial plans to cope with changing economic conditions. Did you find this video helpful and informative? If yes, hit the like button. Comment below on which topic you want to see me creating the next video upon. Don't forget to subscribe and hit the bell icon for upcoming insightful videos. Stay tuned.